Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 121, recorded here on June 23rd, 2024. This podcast is for entertainment only and is not investing advice. Please do your own homework. All right, jump right in here with the market update outlook, and then we'll get into the top Bitcoin news of the week as I see it. S&P 500 posted a 3-week win streak on Friday, though Wall Street's bull market stalled on Thursday and Friday. The biggest highlight of the week was chipmaker Nvidia becoming the world's largest publicly listed firm by market capitalization. A combination of mixed economic data and profit taking ahead of a massive $5.5 trillion options expiry event tempered the S&P's weekly gain. However, the benchmark index still achieved a significant milestone in surpassing the 5,500 point level for the first time ever. For the week, the S&P 500 added 0.6%, while the blue chip Dow climbed 1.5%. The Nasdaq was flat, and the boomers are buying Nvidia, and they're like running away from Bitcoin. It's pretty hilarious. Inflation will take the spotlight next week, with market participants looking ahead to Friday's U.S. personal income and outlays data for May. That report will contain a reading on the core personal consumption expenditures price index, which is widely seen as the Federal Reserve's preferred inflation gauge. How many different ways can you slice up the bullshit numbers? Economists expect core PCE to rise 0.1% month over month and 2.6% year over year, marking a deceleration on both counts from April. U.S. economic growth will also be in focus on Thursday, as the second estimate of Q1 gross domestic product growth is scheduled for release. Turning to the earnings calendar, there are some major names on tap. The world's largest cruise line operator, Carnival, and global economic bellwether, FedEx, will report quarterly results on Tuesday, followed by Betty Crocker and Cheerios parent General Mills, and memory chip maker Micron Technology on Wednesday, and pharmacy chain Walgreens Boots Alliance, and the world's largest shoemaker Nike on Thursday. Getting into the Bitcoin news, well, this isn't really Bitcoin, it's freedom and liberty, which we like to talk about. This is from No BS Bitcoin. This was posted on June 20th. EU Council withdraws vote on chat control, but negotiations will continue. In the last hours, it appeared that the required qualified majority would just not be met, an EU diplomat from the Belgian presidency told Politico. The issue has been postponed indefinitely. The Committee of Permanent Representatives, which meets weekly, is unlikely to secure a majority next week under Belgium's plan. Messaging apps would scan pictures and links uploaded by users, notifying them through the terms and conditions. Users refusing this policy would be blocked from sending pictures and links. Without the commitment and resistance of countless individuals and organizations in Europe, the EU governments would have decided today in favor of totalitarian indiscriminate chat control, burying the digital privacy of correspondence and secure encryption. A big thanks to all those who have contacted politicians and spoken out in the past few days. The fact that we have prevented the Orwellian chat control for the time being should be celebrated, said Pirate Party, gotta love that name, the Pirate Party, MEP and privacy advocate Patrick Breyer. Starting July 1st, Hungary will take over the council presidency from Belgium and has stated that in its program that it will continue negotiations on chat control. Once EU countries agree on a joint position, they will still need to negotiate the final version of the law with the European Parliament and the European Commission. The Parliament has adopted a more privacy-friendly version of the law in November 2023. So, it's they blame it on child porn and criminals and this and that. So, the 0.01% case is an excuse to put privacy and confidentiality at risk for everyone. And that is a standard playbook in the world today by all of our, quote, democratic governments. All right, next up, Bitcoin.com news. This was posted a couple days ago. Digital scarcity. Billionaire Michael Dell and Michael Saylor exchanged dialogue on Bitcoin. So, of course, this has captured a lot of people's imaginations. This week, Michael Dell's posts about Bitcoin sparked a lively discussion among cryptocurrency enthusiasts. Since its establishment in 1984 by Michael Dell, the company has risen to become one of the largest personal computer vendors globally. On Thursday, Dell took to X stating, "Scarcity creates value," to which Michael Saylor responded, "Bitcoin is digital scarcity." Following Saylor's comment, Dell reshared the statement, amplifying the Microstrategy founder's view on his X timeline. Subsequently, Dell also shared an image of the Cookie Monster from Sesame Street, humorously depicted as consuming Bitcoins, adding, "This is a great account to follow, at me Cookie Monster, very entertaining," in his X post. Dell has a long-standing history with Bitcoin, having started to accept Bitcoin as payment back in July 2014. At that time, it was one of the biggest e-commerce businesses to adopt such a strategy. By February 2015, Dell had extended its Bitcoin payment options to the UK and Canada after a successful US pilot. During this period, Dell also ran promotions, including offering a 10% discount on Alienware products for customers who paid using Bitcoin. However, the situation shifted in 2017. Despite initial excitement, Dell ceased accepting Bitcoin payments that year. The pilot program with Bitcoin was discontinued as a result of scant demand, rendering the continuation of this payment method impractical for the firm. In the same year, various prominent brands, including Steam, also stopped accepting Bitcoin due to network congestion and elevated transaction fees at the time. Expedia stopped directly accepting Bitcoin the following year in 2018. Alongside his dialogue with Saylor, Michael Dell initiated a poll on X posing the question, "What do you think will be the next big breakthrough in tech?" The options provided were quantum computing, artificial intelligence, blockchain, and space tech. As of 1:09 p.m. Eastern Daylight Time, with 19 hours remaining, blockchain leads the poll with 37.6% of 13,406 votes. Given that nearly a day is still left, the results could shift significantly. And I don't really have X, so I didn't go look to see what the final was. But interesting nonetheless. We'll see what. There's been a lot of speculation that Dell might start buying Bitcoin, putting it on his treasury. A lot of other companies have started to do that, MicroStrategy being the pioneer in that. But we shall see. Could be good for adoption. It's good to see the conversation anyway. Next up is from Cointelegraph. This was posted June 22nd. Winklevoss twins refunded for exceeding Bitcoin donation limit to Trump. The billionaire Winklevoss twins, Cameron and Tyler, founders of Gemini Crypto Exchange, have had their donations to former United States President Donald Trump's election campaign returned after their Bitcoin donations exceeded the maximum amount allowed under federal law. Oops. According to Bloomberg Report, the amount exceeding the maximum donation was refunded, citing a campaign official who spoke on condition of anonymity. On Thursday, June 20th, the twins each announced donations totaling $2 million in Bitcoin in posts on X, which would exceed the maximum $844,600 that the Trump campaign can legally accept per individual donation. It is uncertain whether the Trump 47 committee returned the amount in Bitcoin or converted it to its equivalent value in cash. According to the report, the donated money is split among the former president's campaign, the Leadership Political Action Committee that pays his legal bills, the Republican National Committee, and 42 Republican Party state committees. The Trump campaign's acceptance of the Bitcoin donation is the latest move to signal a closer relationship between the campaign and the crypto industry, a key player in the 2024 election. Investors and crypto industry players tend to rally behind candidates who promise a lighter regulatory touch. The Winklevoss brothers reportedly attended a June fundraiser for Trump that cost up to $300,000 per person. They have also donated roughly $5 million to the Fair Shake Political Action Committee and its affiliates, which is responsible for attack ads against anti-crypto lawmakers. Many users in the Gemini crypto exchange spent months trying to get funds back they invested in Gemini Earn, a program earning yield on crypto assets run jointly with now bankrupt crypto lender Genesis Global. New York Attorney General Letitia James announced on May 20th that her office secured a $2 billion settlement with Genesis to address investor fraud claims. The settlement ordered Genesis to return funds to investors and cease operations in New York. Gemini agreed in February to return at least $1.1 billion to customers through the Genesis bankruptcy as part of the settlement with the New York Department of Financial Services. The Securities and Exchange Commission sued Gemini and Genesis over Gemini Earn in early 2023. Genesis has since settled. Yeah, that's why we don't put money on exchanges, and we certainly don't want to earn yield on Bitcoin because, well, you are the yield. And why give up your coins for 2% when somebody could basically walk away with them? Bad idea. Bad idea. All right, next up is CoinDesk. This article was posted on June 20th. Speaking of Cookie Monster, Michael Saylor's Microstrategy acquires 11.9 thousand more Bitcoin for $786 million. NASDAQ-listed software firm Microstrategy, the largest corporate holder of Bitcoin, has acquired another 11,931 Bitcoin for $786 million, according to a Thursday morning press release. Led by Executive Chairman Michael Saylor, the company, as of the end of April, held 214,400 Bitcoins. This latest acquisition brings the company's total holdings to 226,331 tokens worth just under $15 billion at Bitcoin's current price of roughly $66,000. The company's Bitcoins were purchased at an average price of $36,798 each, or roughly $8.33 billion. The most recent purchase followed the company's $800 million convertible note offering to institutional investors. That offering size was originally to be 500, then raised to 700, and finally closed at $800 million. Wow. In March, the company added 9,245 Bitcoin for $623 million after raising money in a similar debt issuance. Saylor and MicroStrategy started accumulating the largest and oldest cryptocurrency in 2020 and since have attempted to spearhead a movement to adopt Bitcoin as a reserve asset for other corporate treasuries. While a handful of companies have added modest amounts of Bitcoin to their balance sheet, of particular note is US-listed Semler Scientific, which over the past 3 weeks has not only added Bitcoin as a relatively sizable treasury asset, but in similar fashion to MicroStrategy, is attempting to tap capital markets to buy Bitcoin in amounts far larger than what its current market cap might indicate. MicroStrategy shares have risen roughly tenfold since the firm's Bitcoin purchases began 4 years ago. Semler shares are higher by more than 60% since the company disclosed its first Bitcoin buys in late May. Last week, brokerage firm Bernstein initiated coverage of MicroStrategy, setting a $2,890 price target for the company's shares with an outperform rating. MicroStrategy is currently up 2% pre-market to $1,507 per share. So the cookie monster keeps munching the cookies. Next up, this is from bitcoinnews.com, and this was posted on June 18th. VanEck to launch Australia's first Bitcoin ETF on ASX. In a significant milestone for the Bitcoin market in Australia, the Australian Securities Exchange is set to launch its first its first spot Bitcoin exchange traded fund on June 20th, 2024. The issuer of this pioneering product is VanEck, the global investment management firm. This development marks a pivotal moment for Australian investors and the broader acceptance of digital currencies in mainstream financial markets. The VanEck ETF, Bitcoin ETF, will debut on ASX, offering investors direct exposure to Bitcoin. Unlike derivative-based digital asset ETFs, this spot Bitcoin ETF will hold actual Bitcoin. This provides a secure and regulated avenue for investing in the digital asset, addressing common concerns about the volatility and cybersecurity risks associated with direct Bitcoin investments. The blog announced that VanEck Bitcoin ETF, set to launch on the ASX on June 20th, will be the lowest cost Bitcoin ETF in Australia. Aaron Nyron, CEO and Managing Director at VanEck Asia Pacific, expressed the firm's excitement about the launch, stating, "The demand for access to Bitcoin via a listed vehicle traded on ASX has been increasing, and many of our clients have told us that their clients are already positioned to have an allocation ready to invest." He emphasized the significance of the launch, highlighting availability of the investment vehicle as a regulated financial product on the ASX. Despite the polarizing nature of Bitcoin investing, Nyron acknowledged that Bitcoin is an emerging asset class that attracts interest from many advisors and investors. The approval of the VanEck Bitcoin ETF by ASX follows a successful trend observed in other major markets. In the United States, 11 Bitcoin ETFs have been listed since January 2024, and Hong Kong has also introduced Bitcoin ETFs, albeit with limited success due to the smaller market size. And the article goes on and on and on, so you can read about the rest of it. I did hear, I don't know if the article talks about this, but I did hear that this particular ETF would allow you to take out your Bitcoin in kind instead of having to sell and take out cash. And if that's true, that's certainly an advantage, which would then, not create a taxable event for you, potentially. So anyway, it's good to see from an adoption standpoint that they're moving forward with this. I think it also says here in the article that this isn't the only Bitcoin ETF in Australia, but they may have some futures-based ones. Moving on, Crypto Potato. June 21st, Standard Chartered to launch Bitcoin and Ether trading desk, according to a report. So more adoption. British multinational bank, Standard Chartered, is all set to roll out a trading desk for Bitcoin and Ether. The latest development makes it one of the first global banks to engage in spot cryptocurrency trading. Standard Chartered has been engaging with players in the digital asset space for quite some time and has also partnered with several entities amidst increasing demand for crypto exposure. According to two anonymous sources cited by the latest Bloomberg report, the new crypto desk is nearly operational and will be integrated into the bank's FX trading unit. One source also revealed that it will be based in London. The bank has yet to confirm its latest initiative, but it did highlight the growing demand for Bitcoin and Ethereum by its institutional clients. An emailed statement regarding the matter read, We've been working closely with our regulators to support demand from our institutional clients to trade Bitcoin and Ethereum in line with our strategy to support clients across the wider digital asset ecosystem, from access and custody to tokenization and interoperability. Alongside several major players, Standard Chartered has started expanding further into the digital asset sector to cater to the growing institutional demand. The bank currently holds stakes in two cryptocurrency firms, Zodia Custody and Zodia Markets, which offer services ranging from custody to over-the-counter trading. Crypto exchange Coinbase announced a strategic banking partnership with Standard Chartered for Singapore users in March of last year. A few months later, Standard Chartered launched Libiara, a blockchain division to assist institutional players in tokenizing traditional assets. The unit is currently focused on developing a tokenized government bond fund denominated in the Singaporean dollar. In a blog post in February this year, the bank said that it sees digital assets as an important and permanent part of the future of financial services, while at the same time deeming the potential of stablecoins. The bank has also been extremely bullish while forecasting Bitcoin's price moves, and even predicted that the cryptocurrency could reach $250,000 in 2025 if spot ETF inflows hit the midpoint estimate of $75 billion. Moving on, this one is from Decrypt, posted on June 21st. Bitcoin will soar thanks to failing Japanese banks, says Arthur Hayes, which I read all of his posts, and he's a good follow on Substack. This particular article is quite interesting, so this is a nice synopsis of it. BitMEX co-founder Arthur Hayes says the Japanese banking system is in dire straits and that the consequences will only send Bitcoin and crypto markets higher. Much like U.S. banks in March of 2023, Hayes argued on Thursday that Japanese banks will soon need a massive bailout due to the deeply underwater U.S. government bonds on their balance sheet. Y'all know what that means for Bitcoin and crypto, which is why I thought it necessary to alert readers about another avenue of stealth money printing, he wrote. Since last year's banking crisis and its subsequent central bank bailout, he noted that Bitcoin's price has risen over 200%. The similarities between then and now are striking. Last year, Silicon Valley Bank revealed that it had realized a $1.8 billion loss on its underwater bonds, sparking a bank run and a quick bailout from both the Federal Reserve and the U.S. Treasury. To stem banking system contagion, the Fed also promised to fully backstop any U.S. Treasuries held at U.S. banks. Fast forward to this month, and Japan's fifth largest bank, Norinchukin, has confirmed that it intends to sell $63 billion in U.S. and European bonds by March 2025, since its paper losses on those bonds have gotten too large to bear. Hayes believes that's just the tip of the iceberg, as Japanese banks cumulatively held $850 billion in foreign bonds going into 2022, including almost $450 billion in U.S. bonds per an IMF survey. He said potential bond sale of this magnitude is something that U.S. Treasury Secretary Janet Yellen would not be willing to stomach. That cannot be allowed, as yields would spike higher and make funding the federal government extremely expensive, Hayes said. She will demand that the Bank of Japan purchase these bonds from Japanese banks it supervises. To accomplish this, Hayes suggests, the BOJ will leverage its Foreign and International Monetary Authority's repo facility, which allows it to pledge U.S. Treasuries as collateral in return for newly printed U.S. dollar bills. The consequence? More money printing and fatter bags for people who hold assets like Bitcoin. As such, Hayes said he'll soon be rotating out of Athena stablecoins and into crypto risk, and advised readers to buy the fucking dip. This is just another pillar of the crypto bull market, he concluded. The supply of dollars must increase to maintain the current Pax Americana, dollar-based filthy financial system. Earlier this month, Hayes told followers that it was time to go long on Bitcoin and shitcoins, since central banks are now beginning to cut interest rates for the first time in years. And I'm not a big fan of his shitcoining, but he certainly understands Bitcoin very well, and is an interesting follow for sure. Next up from Bitcoin Magazine, and this was posted on June 20th, Marathon uses Bitcoin mining to heat a town of 11,000 in Finland. Today, Marathon Digital Holdings, a leader in Bitcoin mining, has launched an innovative pilot project to recycle heat generated from Bitcoin mining to warm a community in Finland. The 2-megawatt data center, energized at the end of May, is located in the Satakunta region, home to 11,000 residents. This pilot project in Finland is a critical step forward in our strategy to expand globally and innovate sustainably, said Fred Thiel, Marathon's chairman and CEO. We are not just producing digital assets, we're heating homes and integrating sustainable practices into our business model. We believe that this kind of innovation can drive the advancement of the digital asset compute industry and further strengthen Marathon's leading position in the field. The initiative marks Marathon's first district heating project and its debut in Europe. District heating involves centrally heating water and distributing it through underground pipes to heat local buildings. Finland, known for its clean energy mix, relies heavily on biomass for district heating. By utilizing heat from digital asset data centers, the project aims to reduce carbon emissions and operating costs. Europe's colder climate has given rise to an extensive network of district heating systems that provide warmth to millions of residents, Marathon stated in its new Heating with Hashes report, published in full below. This same climate has attracted a different industry, data centers, which benefit from reduced energy consumption and infrastructure costs associated with the cooler temperatures. The share of electricity consumed by data centers in the EU is at least double the global average, with data centers accounting for around 3% of the EU's electricity consumption compared to 1 to 1.5% globally. These energy-intensive facilities generate three significant amounts of heat, creating a unique opportunity for strategic partnerships with district heating systems. One industry needs heat, while the other generates plenty of it. Marathon continued in the report. Instead of wasting the abundant heat produced by data centers, it could be recycled to meet heating demand. This innovation transforms an unwanted byproduct of data centers into a valuable resource for district heating systems, reducing costs and waste for everyone involved while reducing the need for inefficient carbon-emitting heat sources. The project is part of Marathon's broader commitment to sustainability, expanding its footprint to 12 sites across 4 continents. According to Future Markets Insights, Inc., the district heating market is projected to grow from $198 billion to $340 billion by 2033, offering significant growth opportunities. By recycling heat, Marathon aims to enhance its sustainability portfolio and explore new revenue streams, aligning with its goal of achieving zero-cost power for digital asset computing. Following the success of our pilot project in Utah, where we demonstrated that it is both economically viable and environmentally beneficial to use landfill gas for digital asset compute, we have continued to experiment with innovative ways that our operations can add value beyond securing distributed ledgers like Bitcoins, stated Adam Swick, Marathon's Chief Growth Officer. This pilot project in Finland is our first attempt to convert the heat that we produce as a byproduct of our operations into a valuable resource for our local community. We look forward to gathering more data from this project as we look for additional ways to leverage digital asset compute to build a more sustainable future. And then there's a link to their website here so you can read more about the Heating and Hashes report. But very interesting, and actually they could turn it into a revenue stream because basically the whoever's getting the heat is going to be buying it. So that can help offset the cost of energy that they use to run the miners. So very, very interesting concept, and obviously would work in the immediate locale where the mining operation's located. But still, a great innovation happening in the mining industry for sure. And finally, from BitcoinNews.com. This was posted on June 21st. Bitcoin miners' reserves at record low. What does it mean for the market? Bitcoin miners' reserves have plummeted to their lowest levels in over 14 years. This development has sparked widespread discussions among investors, analysts, and enthusiasts about its potential implications for the market. This article breaks it down, explains what this means and why it's significant. According to data from several sources, including Glassnode and Into the Block, Bitcoin miner reserves have dropped to approximately 1.9 million Bitcoin as of June 19, 2024. This is the continuation of a trend seen in April when the reserves hit a 12-year low. This marks a decline from the 1.95 million Bitcoin miners held at the beginning of the year. For context, this is the least amount of Bitcoin miners have held since February 2010. Lucas Otumuro, head of research at Into the Block, explains that this trend is largely driven by the recent halving event that took place on April 20th, 2024. This event effectively cut the mining rewards in half, reducing them from 6.25 to 3.125 Bitcoin. Otumuro mentioned that over time, miners are likely to hold on to fewer Bitcoin because the halving event squeezes their profit margins, pushing them to sell their reserves. Despite the drop in the number of Bitcoin held, the fiat value of these reserves has soared. Currently, the total value of these reserves in US dollars is hovering around an all-time high of approximately $135 billion. This paradox can be explained by the recent surge in Bitcoin's price, which has risen to over $60,000 over the past few months. Sasha Grumbach, CEO of Green Mining DAO, notes, "It seems today's miners have learned from past cycles. Gone are the days of over-leveraging and holding on to too much Bitcoin, a strategy that backfired in the past." Essentially, even though miners are holding fewer Bitcoin, the higher value per Bitcoin means their balance sheets are, in dollar terms, are healthier than ever. He added, miners' focus seems to be on short-term financial stability rather than long-term, large-scale accumulation of Bitcoin. In other words, having less Bitcoin is normal in the market phase we're in. The decline in miner reserves has several potential implications for the Bitcoin network and the broader digital asset market. One key concern is the effect on the Bitcoin hash rate, which measures the processing power of the Bitcoin network. A decrease in miner reserves could lead to a corresponding decline in the hash rate, as miners may reduce their mining activities due to lower rewards. Moreover, with fewer Bitcoin held by miners, the available supply in the market could become more constrained, because obviously miners are your natural sellers in the market. This scarcity could potentially drive up the price of Bitcoin even further, as demand from investors and traders outpaces the available supply. Maybe that's a good thing. CoinShares predicts that while there might be a dip in the hash rate post-halving, it is expected to surge again in 2025. Mining companies have seen an influx of capital investments since the start of the year. Research firm Bloxbridge Consulting reports that approximately 10 public miners together raised $2 billion through equity financing activities in preparation for the April halving. The reaction from the market has been mixed. On one hand, stocks of Bitcoin mining companies have seen significant increases. For instance, US-listed Bitcoin mining stocks surged in the first half of June, with companies like Core Scientific, TeraWulf, and Hut 8 Mining leading the charge with impressive gains. JP Morgan analysts noted that the market capitalization of Bitcoin miners listed on US exchanges hit an all-time high of $22.8 billion as of June 15, 2024. This surge in stock prices contrasts sharply with the declining miner reserves and revenues, which have been trending downward over the past few weeks. Looking ahead, experts have varied opinions on what this trend means for Bitcoin's future. Willy Woo, a prominent on-chain analyst, suggests that Bitcoin's price might not see significant surges until the ongoing miner capitulation event is over. He explains, pointing to the need for more stability in miner activities before expecting major price movements. On the other hand, analysts at Bernstein have made bold predictions forecasting that Bitcoin could reach $200,000 by 2025 and even $1 million by 2033. Such optimistic predictions are based on the assumption that demand will continue to rise while the supply remains constrained. For investors, the decline in miner reserves coupled with the high fiat value presents a complex picture. On one hand, the rising value of Bitcoin and the constrained supply could mean potential gains. However, the ongoing sell-off by miners suggests that they might be hedging against future uncertainties. And then again, if you're just staying humble and stacking sats, you don't really care. You will just sit back, make some popcorn, and watch. Finally, I wanted to highlight this week's post featured on Bitcoin Fortress Substack. It's entitled Bitcoin Institutional Adoption Update. Nothing stops this train. And went through a bit of different data points on institutional adoption and where it's at and how it's grown, and some significant things that have news items that have come up recently. So it is quite interesting and quite different than any other time of Bitcoin's history, and it seems like it's going to continue. So with that, I'd like to thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. I like to listen to all of my podcasts on Fountain. You can get stats just for listening. It's nice. And if you like the show, you can always give me a boost. That would be very cool. I actually had a couple listeners give me some very substantial boosts recently, and so I don't know who they are because they're anons, but thank you. Appreciate it. You can also follow my Substack. It's at bitcoinfortress.substack.com. It is free to subscribe, but if you want to support me, you can always choose a paid subscription, but all of my content is free because it's important to educate people about Bitcoin. And you can also follow me on Nostr. My NPub is included on the in the show notes, and I'm not on any other socials, just Nostr only. And with that, I will talk to y'all next week. Bye bye.